Welcome back, beautiful people. It's Joe, the Nomad Investor, where dividends freedom anywhere is the goal. And I am back with another portfolio update, as long as some news about how green we've been doing, because everything's been going well. But first things first, if you are new here, it would mean so much to me if you could subscribe to this channel. It helps keep me motivated to continue filming videos like this and releasing them as I document my journey. And yeah, as of today, we are currently at 556 subscribers. We are at 19 videos, and I'm currently filming the 20th one. And this is the 18th portfolio update since I launched this channel. So I'm very excited and have been very appreciative of everyone who's been supporting, who's been commenting, giving advice, giving feedback, giving suggestions, and what have you. So as usual, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Now, with that being said, let's hop over into the game plan. Now, I know usually I tell people who are not new here to kind of skip past this part, but actually stick around because I'm going to be talking about my new strategy. But first things first, this is my game plan and goal for growing a small portfolio from $0 to $1,000 per month in dividend income. So basically, I have two sources of income. One is remote work income, and the other is business income. And basically, I've committed to investing a minimum of $300 to around $1,000 plus per month in contributions towards my Robinhood taxable brokerage. And I'm treating that brokerage like a business, aiming for 30% plus high yield. And the way that I'm doing that is by investing into high yield income ETFs such as WPAY, HOOW, QDTE, XDTE, BLOX, XPay, and etc. And I am looking to have a max of 5 positions and alternating between anchors and satellite ETFs. So basically, this is following the core satellite investing strategy, which has been around for quite a while, but I actually learned it from another YouTuber by the name of Eugene Vasquez. Shout out to you, my guy. And then, yeah, basically, I'm going to be either reinvesting the weekly and monthly dividends through DRIP, or I'm just going to stack the dividends to purchase whenever the market moves into a downward turn, like it has been more recently up until the last couple days. So DRIP plus always compounding, that's the portfolio growth strategy. And basically, I'm going to be rinse and repeating this until the account hits $1,000 per month in dividend income. And again, none of this is financial advice. This is strictly for entertainment purposes. Now, hopping in over here, let's zoom out a bit. These are my dividend income milestones while I grow my small portfolio. That way I can celebrate the small wins leading up to the bigger goal along the way. We've already smashed the first goal of $100 a month. We are on track to smash the second goal of $200 a month. And yeah, who knows? Maybe soon we'll even reach that $300 a month goal. Who knows? But anyways, these are all the goals. You guys can pause this if you wanted to see what I'm going to be tracking as we go to the $1,000 a month. Okay. Now, real quick, I did want to talk about a new possible strategy, right? Now, I didn't finish writing this all out, but I did want to discuss it with you guys. So basically, I'm looking to diversify a bit and hold some different positions that are more focused on some growth, but are still going to be paying out some high, or not high yield, but some yield, right? And just to kind of give you guys some ideas, I have been looking into just doing small amounts in the beginning and looking into alternative strategies to kind of hold up my portfolio during times where the market moves down. So I've looked into things like VGT, more traditional dividend stock that has growth involved within it. So even if there's a down market, for the most part, my portfolio would still be in a much more positive percentage range because I'm holding that type of growth dividend stock versus these high yield stocks, these high yield ETFs. Typically, there's not very much growth attributed to them. Usually it's very much so like it has maybe a small amount of growth if you're fortunate enough, and then they pay you out a nice juicy high yield, a nice juicy dividend. So that's just something to keep in mind. But it's something I've been considering more long term. I'm not saying I'm going to start doing that today or tomorrow or the next day, but who knows? As always, things could possibly change. The other thing that I've been considering is using my dividend payouts to just completely go towards paying off my margin in the meantime, so that way I can really experience, that decrease. Now, I do plan on pretty much almost wiping it all out, but I just kind of wanted to speed up the process by using the dividends because why not? That's the whole point of this portfolio. And last, but definitely not least, the other day I got a question about if I ever plan on living off of these dividends in the future. And as of right now, and this could change, but as of right now, I have zero intention of living off of these dividends. I'm treating this like an extra savings account, a high yield savings account, more than the traditional high yield savings accounts that people have. And maybe that's not exactly the best approach, but my long term vision and goal for this portfolio is number one, I want to get to a $1,000 a month in dividend income goal. That's why I'm doing this whole portfolio updates and journey. But also, what I want to do is I want to eventually de-risk my portfolio and move into more stable and dividend growth stock positions. So I think I'll probably do that maybe closer to when I reach more of the 100K plus mark. And I'm not saying that I'm going to get completely out of the high yield space, but I may possibly, put maybe somewhere around 50% more into those traditional dividend stocks just because they're tried and true. They've been around a lot longer. High yield is still such a new concept, such a new product within the financial space. So we don't really have enough of a track record to know how they're going to do over the course of 10, 15, 20 plus years. Okay. So that is part of the new strategy. Now, let's hop over here into the portfolio. As you guys can see, we are doing pretty good. We're at $4,265.75. Our buying power is still the same. We have, if this will load, 47% buffer with a $2,005.36 margin buffer. So we are looking phenomenal there. Obviously, we have $0 in cash. Our total margin is $4,305.23. And we've used $3,234.49. So not much has changed there. Just keep in mind that I will be paying this off, right? And then I have zero intention at this present time. This could change of spending this other $1,070.74. I know a lot of people have been telling me slow down on the margin, decrease my margin. Yes, I'm aware. I've been actually consulting some financial advisors regarding this, and they've been pretty good about explaining things to me. But because they said that I have the money to pay off the margin today if I really wanted to, it's not really a big issue or concern for me at this present time. And then moving into the positions, so let's hop into WPAY, HOW, NVDW. So for WPAY, we are at $3,798.13 in market value. Today, it is at $53.45 per share. We are up $19.95 and 0.53%. So basically 0.5% up. And today's return, or I guess technically Friday's return, because today's Saturday, October 25th, we did over $95.93 in price appreciation. So that's looking good. And then our average cost is $53.17. Not much change there. We still got 71 shares and still at a portfolio diversity of 50.64. And you might be wondering why it went down from 59% to 50%. And I'll show you why in just a second. But real quick, as you can see, the maintenance ratio is still at 30%. So thank you to Robinhood for not changing that. Not that they would. This is not really a risky position as of right now, but something to keep in mind. Now, hopping over to HOOW, we have around $2,258.76 in market value. As you can see today, or it ended yesterday at $72.85 per share. We are up $143.37 which is also 6.78%. And yeah, for the previous day's return, it was $104.18 or up 4.84%. So because my total return is up so high with this, it's actually increased my portfolio diversity. I think it was at 26% previously, and now it's at 30%. But yeah, our average cost per share is $68.23. We're at 31 shares. And again, that 30% portfolio diversity. And again, same thing here. Not much has changed with the margin ratio, which is what we like to see. And we're hoping it stays that way. Moving on to NVDW, our current market value is $1,443.36. We're at $46.56 per share. And we are up $35.07 or 2.49%. And our today's return, or again, yesterday's return technically, is $34.41, which would be 2.44%. Our average cost is 45.43 per share. We have 31 shares, and we are at a 19.24% portfolio diversity. And this one is also at a 30% margin ratio. So far, so good. Now, for those of you who are new, this is my investing journal that we are hopping into right now. I basically have been tracking my portfolio since I started this journey. And yeah, the first entry that I have is August 19, 2025. I only had a net account value of $678.67. As you can see, I was an alti at the time, and that didn't last very long. If you look in my next log, which is the 25th, I didn't have alti anymore because I just saw the warning signs early on. But this is where I'm currently at as of today. As I already kind of covered a lot of these numbers, but I've contributed $2,081.16 this month. I don't plan on contributing anything else for the remainder of this month. However, next month I will be starting over and contributing some more. And then, of course, with the margin positions included, we have $7,500.24 in net account value. Okay. And then, yeah, these are the dividends that I've received for the entire month of October so far. For those who are new, we've gotten $196.66. So we are close to the $200 a month goal. We shall see how that goes. Now, hopping over to our dividend sheet. So yeah, as you can see, if you've been watching my videos, we are looking good. We're actually all in the green right now, which we like to see. And for those of you who are new, I always like to look at my market return and total return. That is how I keep track of my metrics. Now, again, this doesn't log the after hours, if I remember correctly. It just logs the normal market hours. So let's take a look. So we are up 10.64% for HOW, 2.69% for WPAY, and 3.32% for NVDW for total return. Now, the total return includes all the dividends that I've received. So that's why the total return is going to look different from the market return. Now, for the market return, we're at 6.37% up on HOW, 0.13% up with WPAY, and 2.35% up with NVDW. Now, of course, this number is going to be more accurate on Robinhood as of right now because, again, Robinhood is showing the after hours performance as well. But for those of you who are watching here, these are the numbers that it's currently at. So for total return for HOW, $218.57, $100.26 for WPAY, and $45.23 for NVDW. For market return, we are at $130.82 for HOW. WPAY is $4.90, and NVDW is $32.10. So that's looking good. Let's hop over to the dividend log. I'm just showing this for those who are new mostly. So if you are not new here, bear with me here for a moment. But basically, I've been holding WPAY since its inception. So you can see I have the earliest log of my first dividend payout of $4.85. Or not my first, but my total dividend payout for the month of September. But these are the totals that we have for each of these positions. And then let's hop over to the side here so you guys can see this. These are all the dividends from the positions that I've sold. As you can see, we have the earliest log of $5.20 back in August. So that's just something to keep in mind. And over the course of this year so far, we are making $230.83 in dividends. Okay. Now, for those of you who haven't already, make sure to follow me on X. I am under the handle I'm Nomad Investor, so you guys can find me there. I have yet to verify my account, but I'll probably do that at some point. This is where I'm basically posting updates. But yeah, I wanted to hop really quickly into some news, so let's get to it. So I like this guy's channel, Richie B. I shouted him out on the last video, but his handles want to be fresh. And he said, and that's all, folks. Markets close green after a brutal start to the week. Even though my prediction of back-to-back green days came through, I definitely don't want to get too comfortable. Next week brings rate cut decisions, tariff talks, and fresh data drops that can move the needle fast. I completely agree with this entirely. And then he said, we could just as easily see these gains extend as we could see them erased. Till then, we survived another violent week, and YieldMax ETFs holders get paid tonight. Now, he posted this yesterday on Friday at 4:05 p.m. So he said, enjoy the weekend, fam. You all earned it. I completely agree with this. You know, like, it's been nice to have these past 2 days be green, but I am not getting comfortable. I am keeping my eye on the ball, and I'm ready to make the appropriate moves just in case I need to. So I highly recommend that everybody stay vigilant or stay attentive. So moving on to the next news, we have from X handle Patriotic Ape, the ape of America, I guess. That's pretty cool. He said, exactly 6 weeks ago today, my portfolio, which is a 100% drip account, was started on Robinhood. I held 100% alti until I saw the writing on the wall. Okay, this is important. I think a lot of people don't see the writing on the wall with these high yield positions, not just alti, but just in general. He says, now I have HOW, great choice, HOOY. I have to look into this one. This is from YieldMax, BLOX, and WPAY in it. It's my plan to snowball this account into 1M So wish me luck. Yeah, I'm just sharing this because this is super interesting, and most importantly because he talked about the writing on the wall. I've mentioned this, I think, in the past couple videos that I've done, but it's very important that we see the writing on the wall. Don't fall for hopium. Don't fall for copium. At the end of the day, see things for what they are. Don't be blinded by emotion. And most importantly, don't marry your bags. Be willing to pivot when necessary if you see the writing on the wall for a position that you're in and it's not looking good. Okay. Next, I wanted to cover some ETFs that I've been really looking into more. I know I've talked about this in the past, but I wanted to bring it up again. I'm very, very interested in BLOX. I haven't gotten in a position on it yet, but it's something that I am highly considering. And yeah, so it says here, BLOX is an actively managed exchange traded fund that provides exposure to blockchain technology to enhance income and provide portfolio diversity. The fund blends digital asset related investments and traditional income generating securities to capture growth potential in emerging technologies while maintaining a focus on risk adjusted returns. Okay, so basically, the fund's objective is Bitcoin plus Ether plus crypto industry companies plus weekly income, and that's what equals BLOX. It doesn't say what the distribution rate is currently, and I'm not sure why that is, but I wanted to scroll down here to the distribution details, and basically, it's been paying more recently 18 cents a share as of the 20th of October. So this is something where it's going to be a lot lower of a yield, but I think it could potentially be worth it because of what it's investing into. And I think this is probably going to focus on growth first and income second. So that's just something to keep in mind. And then I really quickly wanted to hop into the holdings. So they have iShares Ethereum Trust ETF. They have Galaxy Digital. If you guys aren't familiar, this is a crypto slash, I think, stock brokerage as well, technically. Yeah, this is a competitor of Robinhood. Also, they have Riot Platforms. Not sure what that one is. IREN, Cash, and Other. They're invested into Robinhood Markets. Hut 8 Corporation. No idea what that is. Cypher Mining. No idea what that is. It's maybe a Bitcoin mining company. Possibly. I'm not sure. Taiwan Semiconductor Manufacturing Company. Very big semiconductor company. And then Mara Holdings. And again, I don't remember what Mara Holdings is, but I think this has to do with crypto, if I remember correctly. If you guys know, comment down below. But yeah, these are the holdings. This is looking really good for that. And let's take a look at the price chart. So as you guys can see, obviously the past day, it was up 5.32%. If we look for the week, it's only up 0.43%. For the month, we see it was up 10.98%. And for 3 months, it was up 11.12%. And for year to date, it is up 33.16%. So it's still not back at its all-time high of $27.56. Naturally speaking, none of my positions are back at its all-time high at this present time, especially with all the uncertainty and news that's been going on. But this is still, I think, not in a bad spot to possibly look into getting into, but we shall see. And yeah, I mean, it did launch in June 17th of 2025. So that's something to keep in mind. It's only been around since June, but this is something that I think could possibly be very interesting. And I have, again, been considering getting into it. Moving on, I wanted to hop into the next one, and that's CHPY. So I actually am not a huge fan of yield max ETFs. I haven't been a huge fan of how they've been managing their funds, but I also am not a biased person. I'm also very open-minded. And so when I see something that interests me, I like to take a look at it and give it a chance to at least do some research and possibly even look into maybe going in on it, right? So this one is a yield max semiconductor portfolio option income ETF. Now, the only thing that sucks is this is going to have cap upside. But yeah, let's go into this. So it says CHPY is an actively managed ETF that seeks current income and capital appreciation via direct investments in a select portfolio of semiconductor companies. CHPY aims to distribute such income on a weekly basis. And yeah, it says right here, CHPY's exposure to gains, if any, of the share price returns of the underlying securities is capped. So yeah, that's something to keep in mind. And it says CHPY is subject to all potential losses if the shares of the underlying securities decrease in value, which may not be offset by income received by CHPY. So yeah, that's just something to keep in mind. And this has a 51.86 distribution rate with a return of capital rate of 67.85%. So that's something to keep in mind. And then if we look down here, it looks like it's been paying more recently. It paid out 57 cents per share. The weeks before, it did around 40 cents, 43 cents, 40 cents, and 41 cents. So this is looking actually pretty interesting. Now, one thing to keep note of is what are the holdings currently? So they got Broadcom, NVIDIA, Lam Research Group, Micron Technology, AMD, Taiwan Semiconductor Company, KLA Corp, Qualcomm, ACM Research, and Intel Corp. So these are actually some pretty good holdings, I would say. Pretty good positions that they have in this fund. And correct me if I'm wrong, please comment down below if I'm just unaware of it. But I haven't seen too many other semiconductor portfolio option income types. The only one that I've seen that has anything even close to a semiconductor in their portfolio was BLOX, which I just covered. And to my knowledge, it's really just Taiwan Semiconductor Manufacturing Company, so TSMC. Let's hop into the chart for this one. So this one looks good. Oops, let's hop into the day. So for the day, they're up a little over 1.25%. I think it's technically 1.5 if you add the after hours. For the week, it's down 2.58%. For the month, it's up 7%. For 3 months, it is up 8.64%. And then let's see, year to date, it is up 23.21%. It actually has performed fairly well in my personal opinion. But yeah, I'm very curious. And yeah, it's got a good margin ratio of 25%. So this could be something that I might potentially add to the portfolio. I'm not really sure yet, but just something to consider. And there's one more thing that I wanted to share with you guys. So let me pull it up. So yeah, I really wanted to share with you guys this. This is from High Yield Hustle. I really enjoy following them on X. They've got a lot of great insight, and I like that they're kind of fairly well diversified in many different funds, in many different positions, and etc. So yeah, they said this about BLOX. They said BLOX is going to prove a lot of misconceptions about this space wrong in 5 years. Appreciation is priority number one. They harvest more yield than they distribute. The strategy is designed to mitigate the typical upside cap issue. I could go on and on. Now I'm hopping over here to a tweet by David Nicholas over at Nicholas Wealth. He says, our hedges that we put on in BLOX on 10/9 were removed on Wednesday, 10/22, right before the close. The hedges helped during the sell-off of the past few weeks, and by removing them, allowed us to capture the nice move up over the past 2 days. Have a great weekend. I think this is a great example of proper management. They do a pretty good job, at least as far as I can see so far, of managing this fund. And I think their chart speaks for itself. This is a very, very good chart. And honestly, it reminds me of a lot of more bullish charts that I've been paying close attention to here. I mean, even if we look year to date, Chippy's chart doesn't even look exactly like this, and it's been out a lot longer. Let's do 3 months. It's still a good chart, don't get me wrong, but it's not the same movement, right? If we look at WPAY, let's look in the 3 months. WPAY started off doing a similar. Currently, it's a little bit down, but it's back on the rise again. But still, that's kind of where BLOX is kind of, they're hedging, right? They're securing themselves. They didn't get hit so harshly. And part of that is a different strategy, different approach. Keep in mind, WPAY, for instance, has 1.2x exposure to the underlying assets that it holds within its holdings versus BLOX. BLOX is a lot different. It's not a leveraged ETF at all. So that's just something to understand and note. And they're doing an options overlay, right? So this is something that I'm pretty seriously think I'm going to be getting into, and this is why. Anyways, thank you guys so much for taking a time to watch this video. It really means a lot. If you haven't already, please subscribe, especially if you're new here. And please also smash that like button. It does go a long way in helping with the algorithm. And if you have any questions, comments, feedback, concerns, or ETFs you guys want me to check out, comment them down below. And yeah, until next time, guys, peace.